Today's stock market is flashing warning signs. A weak jobs report sent indexes lower, gold is surging near all-time highs, and investors are asking one big question. Are we in an AI bubble? And if so, when is it going to pop? In this video, we'll break down the latest market news, the risk and opportunities of an AI bubble, and most importantly, what traders and investors can do right now to prepare for what's ahead. Welcome back to the Flex Free Game channel. This is where we give you free game on the market. Just make sure you have everything you need to be successful with your trading and investing. And let's go ahead and jump into the headlines for today. So the August U.S. jobs report came in much weaker than expected, with just 22,000 jobs added versus the 75,000 that Wall Street had penciled in. Unemployment also ticked up to 4.3%, which is the highest level since 2021. Markets quickly reacted. The Dow dropped around 245 points today. The S&P fell almost 0.5%, and the Nasdaq slipped as well. Meanwhile, gold spiked to nearly 3,600 per ounce, signaling that investors are rushing towards safety, and bond yields sank on expectations that the Fed is about to cut interest rates, possibly as soon as this month. But what really caught everyone's attention was individual stocks like Nvidia that slid nearly 3%, Lululemon that fell off a cliff almost 19%, Tesla that climbed 4%, and Broadcom that surged over 9% after strong AI chip earnings and a massive new order likely tied to OpenAI. Now here's the bigger picture. Despite today's job shock, tech and especially AI continues to dominate market sentiment. Companies like Nvidia, Microsoft, Broadcom are being priced as if AI adoption will rewrite global economy overnight. That raises a question. Are we in the middle of an AI-fueled stock market bubble, similar to the dot-com era of the late 90s? And if so, how do you protect your portfolio while still taking advantage of the opportunities? So are we really in a bubble? Now, there are some signs that point to bubble-like behavior. Valuations, Nvidia has traded at earnings multiples that look stretched even with strong revenue growth. The hype cycle, every company is suddenly branding themselves as an AI play, even if their exposure is limited. Concentration risk, a handful of mega cap tech companies are carrying a broader market similar to how Cisco, Intel, and AOL dominated the dot-com bubble. But there's also a key difference. Unlike the late 90s, AI is already really driving revenues, cloud computing, chips, enterprise adoption, meaning it's not all smoke and mirrors. The question is, if AI is real, how much of its future growth is already priced into the stocks today? So what happens if the bubble pops? If the bubble pops, history tells us what could happen. Overall tech names could fall 50% or more. Indexes like the Nasdaq will face sharp correction, dragging down retirement accounts and portfolios. Liquidity could dry up quickly, just like we saw in 2000 and again during the crypto unwind in 2022. However, bubbles don't pop overnight. They usually deflate in waves with rallies and sharp pullbacks along the way. So the real question is, what should you and I do to prepare? So I have a few strategies for us to go over today. First one, we talk about this a lot, diversify. Don't put all of your money into one or two AI stocks. Spread risk across the sectors like energy, healthcare, and consumer staples. Take profits on the way up. If you've doubled or tripled your money in Nvidia or similar names, consider trimming positions. You don't have to sell everything, but securing gains protects you from the downside. So, again, if you've moved up a lot, you made a lot of money, go ahead and take a little off the top, keep it in cash. Hedge with safe havens. Gold, cash, and short-term treasuries are performing well in uncertainty spikes. Use options carefully. We're very big on trading options, cover calls, and things like that here. Traders can consider, protective puts or cover calls to lock in gains while staying exposed. And then think long-term. And that's really a big thing that we talk about in our program here is having a long-term mindset. AI isn't going away. It's going to be here for a while. Even if the bubble bursts, the winners of the next decade will likely be companies building an AI infrastructure, chips, cloud platforms, and enterprise applications. So here's a call to action. So if we are in an AI bubble, and possibly we are, but bubbles can last longer than most expect, and fortunes can still be made on the way up. The key is being prepared for both outcomes, staying invested, and managing risk smartly. If you found this breakdown useful, go ahead and hit that like button. Go ahead and hit the subscribe button. We'll have more content on a weekly basis. Also, if you are looking for coaching, you want someone to go ahead and help you out, all you have to do is go ahead and type Flex down in the comments. we will go ahead and send you a link that's going to take you right to where you can learn all about our course and how we do individual coaching in our program here. If you are looking for more information on covered calls and you just want to have a great income strategy using the covered call strategy we use, you can go ahead and type in income. We'll send you some information on our Udemy course. And then lastly, if you just want a free newsletter that can help you stay up to date on the market, on top of what we're providing here, go ahead and type free in the comments as well. And we'll go ahead and send you over a way to sign up for our free newsletter. So that's going to wrap it up for us today. We'll see you on the next one. Have a good one.